Hey guys, welcome to this bi-weekly forecast for the third week on the FX markets. Today we're going to be looking at three pairs as always. This time I've selected the pairs myself because in the previous 2 weeks we've been looking at pretty much the same similar pairs, and this time I do want to break it down a little bit and I want to give you an insight on other pairs we could potentially be looking at for this week and going forward. Now, an interesting pair this week is most definitely USD CAD. Reason being is I do believe there is supreme upside potential for USD CAD, and in particular CAD pairs. And when I say this, I'm talking specifically CAD weakness. So, providing we do see CAD weakness here, then we do have a lot of potential for upside. Now, to break this down, we need to go to the weekly time frame. So we're looking at USD CAD on the ICE exchange in particular, and if we look here very closely, you can see that USD CAD is, whether we want to interpret this as a five-way sequence is up for debate, but USD CAD is definitely in a kind of, you can say it's an impulsive sequence, but it's definitely motive. So the motive wave is definitely to the upside. So it's a bullish trend overall, right? Because we've ended the corrective trend, which has been outlined here. This can, of course, be determined as a corrective wave if we want to. It's all about interpretation and perspective. So, say for example, this is just a five-way sequence, right? What we are concentrating on is this corrective sequence here. Now, the reason that there is still upside potential is because we have an incomplete B wave or potentially X wave, depending on how you want to see it. It's corrective, so it's a B wave or an X wave, right? So we have seen price retrace upwards. It has corrected this previous upward wave, which is a double, it's a double zigzag, not a double three. In fact, it's a double zigzag. So it's corrected this double zigzag, and you can see we've corrected this wave here. So we are now in the final stages of this sequence. Now, I believe there to be a big push. A big push is due or is definitely necessary in the next couple of weeks, which is why I'm bullish on USD CAD. I will explain this in a little more detail on lower time frames, but on the weekly perspective, we can keep our bullish bias. The question is whether price will end up reaching the 1618. Now, it's up for debate. These levels aren't set in stone. They're just subjective levels. They're pretty much Fibonacci targets. Doesn't mean price is going to reach there. Although in the past, Fibonacci does play a big role in where price looks to test. So we have two levels, right? We have the 1 and we have the 1618. There's no reason why we can't just test the 1 again and fall back down. There's no reason why we can't test the 1618 and fall back down. But this goes in line with our bias for dollar strength. So if we do see dollar strength, yes, we can expect USD CAD to definitely, most definitely rise in significant fashion here. So let's just take this down a notch and go to the daily time frame. And what we see here is a very nice sequence. Now, I've outlined the target 1 for the members insight group. We are already in this trade and we are already in profit. So this is a good time and maybe a good opportunity to look for a retracement entry down towards any particular levels before we can look to buy this pair higher. Now, quite simply, we know price has tested previous resistance or this previous X wave if you want to look at it from there. So as you can see, price has tested this previous resistance of this previous X wave and it has reversed. Also, if you use Fibonacci, the price has retraced to the 764% fib. So it's retraced 764% and it has produced a significant reversal of this level and primarily a strong, I wouldn't class this as a bullish engulfing, but definitely a strong morning star and a pretty much significant reaction. And price is currently in retracement mode, quite similar to what happened back in January. So price did bottom in around the 1st of January, and in the new year, a new trend began with still a retracement, and we are continuing the next wave of this trend. Now, can we expect this trend to manifest itself quickly and fruition, we don't actually know. But if we do see something similar to what happened in March, then by all means we can expect a strong dollar coupled with a weak CAD to occur here, which is why we've marked out two targets, the 1 and the 1618, as two potential targets, both offering a lot of pip potential. Going now to the 4-hour time frame, again we just continue to break down the waves. So we saw a triangle at wave X, and it produced this nice beautiful channel with a double zigzag as wave W, triangles wave X. Whoops, I will return that back to where it was because I don't want any data out of line, right? So we had a double zigzag as wave W, triangles wave X, and we had a clear double zigzag as wave Y, ending pretty much at the 764 in confluence and testing the lower boundaries of this channel. So this is a beautiful channel. This is textbook Elliott right here, right, in combination with Fibonacci and in combination with market structure, right? So as far as we're concerned, the sequence now for USD CAD is bullish. So what we will be doing is buying the dips, quite simply. Now, what we want to do again is break it down a notch a little more. We don't want to go to the minute time frame, but we do want to outline what's happening on the hourly time frame, right? So quite simply, if we look closely, price is currently corrective. We don't know if there's going to be a triangle sequence forming here or if we're going to see a test of the 618 first. Primarily, we want to see a test of the 618 before a move higher. However, in a secondary bias scenario, we'll be looking at the high of wave W before we can even consider buying this pair. So considering we do see this, then at the end of the day, we can look for a buy opportunity on the breach of wave W, or we can look for a buy opportunity on the test of the 618, or unless we spot a different pattern in formation. So if a triangle pattern does form here, then we know exactly what we need to do. So this is our bias for USD CAD. If the current sequence of the market is up, remember guys, if you've been with us a long time, you would remember we made a call for USD CAD around here when it reached the 0618 and price reversed emphatically. These are the kind of calls we take pride in. This was the beginning of the new trend. So if you don't believe that USD CAD is going to make a rise here, then I would think back to when we made that last call and then think about the decision you are about to make. Let's move on to the next pair. Right. So the next pair we'll be looking at is USD Swiss franc. The reason why we're looking at USD Swiss franc is quite simple. We have to reevaluate the monthly time frame for this. Right, and the reason why we reevaluate the monthly time frame is simple, because we have to remember from the year 2000, where we had the dot-com bubble when it burst and we had that market crash, USD Swiss franc did see a lot of movement, and it actually began a new trend. The reason why it began a new trend is because when market crashes do occur, cash tends to move into safe haven assets. Right, so safe haven is also, the dollar is also a safe haven, the Swiss franc is a safe haven, the yen is a safe haven, but the Swiss franc is more of a safe haven than both the yen and the dollar, as you can see on higher time frames. The Swiss franc is usually definitely actually you can say it's definitely a subsidiary of, in comparison to more currency. It's because I'm trying to put in the best way possible for you. The Swiss franc is basically king of safe havens. The reason being is that their banking system is one of the best banking systems. I believe they operate in a privatized kind of banking system, and although they have negative rates, which is the only implications to investors, they still have one of the strongest banking systems. Therefore, they have one of the strongest currencies as well. And that's why a lot of people, or you can say investors, look to invest in the Swiss franc during times of crisis. So in Swiss franc, we have to remember, right now we are technically in a financial crisis. However, the difference between this financial crisis and other financial crisis is the demand for dollars. The system needs dollars, and because the system needs dollars, and there's a lack of dollars and a lack of liquidity, that's why the dollar is strengthening, because it's considered valuable, right? Even though there's a lot of dollars in the system already. This is why we can expect maybe USD Swiss franc to benefit from here. If the dollar benefits, USD Swiss franc will definitely benefit, because it's a battle of safe havens, right? So what we can be looking for here is definitely a move higher. Now, we're not saying that price is going to reach the 618 here, but what we are saying, and what we are looking at, is definitely the 50%, right? The 618 is definitely, as you can say, just a bonus target, right? Because if we want to look at the 618, we're looking at the 1, or we're looking at the 0618. And the way we're doing this is if we go into the weekly time frame, we're looking at this corrective sequence here. So we have wave W as a clear flat. Now, what's great about the wave principle is the fact that it outlines all patterns, regardless of what's happening in the market. It's great, because when this big crash happened in 2015 with the Swiss franc, when the SNB, which is the Switzerland Central Bank, unpegged the Swiss franc from the euro, there was a big massive crash, crazy amount of pips, and what this actually completed was an expanded flat. So in essence, we can say, due to market sentiment and social mood, that the market was expecting something bad to occur, right? And that's exactly what happened. Because something bad did occur and social mood was indicating that we could see maybe a shift in, I guess, the psychological mindset of investors in terms of what could potentially be happening next. It created an expanded flat, and we saw a reversal, right? So this was wave W. Next, we had another corrective pattern, which is a double zigzag. So again, another pattern coming to fruition here. And because we had a double zigzag, we've labeled this wave X, because we've had another, I guess, intervening pattern during this wave X. So the predetermined high is actually the high in the 12th of December, right? Now, to finalize this, we have now, or we did complete the final stages of wave Y back in the 9th of March when the dollar bottomed out. Why and how can we confirm this? Fibonacci. So in essence, price also reversed off the 236 of this Fibonacci level at the same time. Because this has happened, we did see, I guess, a strong reversal and a sequence change in trend. This is why I believe we are going to have dollar strength, and this is why I believe we can see the likes of the Swissy reaching the likes of 113 or potentially 125, 130. That is a strong feat. It is a strong target. It is a high target. Yes, I understand that very much. But in the forex market, we have to remember there's always going to be unusual movements. But considering that we do at least see a portion of this move, this is a fantastic opportunity. Now, going on to the daily time frame, again, we have seen a nice, not strong reversal of any particular Fibonacci level, but we have seen a nice strong reversal nonetheless, right? So there's no saying that this is an actual low here. This can still be part of a corrective sequence. We could maybe see a triangle or flat pattern form here, without a doubt. However, if we do see new highs manifest here, then we have two targets for USD Swiss franc. We have the 1, which is at 1.01, and we have the 1618, which is at 1.05, both offering healthy targets if we're referring from the current price level. So we can look potentially at 1,000 pip targets here. And that's exactly what I'm looking at, guys. I'm looking at these lengthy targets on USD Swiss franc, and in particular, I'm hoping to see a big rise in the dollar very soon. So putting into perspective USD Swiss franc and USD CAD, Why can't we see a big move occur here? I don't see why not. And this is great. And this brings us to our final pair, USD JPY. I'm particularly excited about USD JPY, and I'll break down why. In particular, I don't actually think we're going to see a retracement to the 764. I think we're going to see a retracement to the 618. That's just me, right? So I don't think we're going to see it. I think we are in for a 618 retracement before we see a superstitious move higher. Right, so what I'm expecting is some sort of superstitious move on USD JPY and a strong, significant move. And this is, of course, ambitious. We would need to see maybe other yen pairs see some sort of benefit here. But should this come into fruition, then we are looking at a very, very healthy target. There's no saying that we're actually going to reach there. We could potentially just reach the 764, which would be more realistic. Either way, they are both great targets, right? So this is what I'm expecting. I'm still bearish longer term on USD Japanese yen, but providing this happens, let's go back down to the daily time frame. Providing we do see this rise on USD JPY, then most definitely can we see something big happen here on USD JPY. But we must see a retracement. We must see a retracement to the 618 before we can even consider a buy here. But providing we do see a retracement here, most definitely will you see us purchase USD JPY for a large amount. Now, what we're looking at here and what we're being patient for here is quite simple. We are looking for this opportunity. Providing we see this opportunity, we will be targeting 118 to 120, right? So this is definitely a considerable target, without a doubt. We did catch USD JPY from the low here, and we caught 700 pips. And again, guys, we will be looking for this opportunity. So opportunities are definitely in large amounts, but we need to be patient, and we need to wait until these opportunities come into fruition. And guys, another thing I want to mention, if we do see the yen or USD JPY benefit against the yen going forward, then most definitely expect the stock market to take a hit. And I will leave you off with that, guys. I hope you enjoyed this video. I hope this bi-weekly forecast was beneficial to you. Please take advantage of the information I'm telling you, because a lot of people, they do not understand the market mechanics. They don't understand how the market works. They don't understand social mood. They don't understand market sentiment. They don't understand the psychological reasoning behind these market patterns. And they just don't understand the overall functions of the markets. They focus too much on the fundamentals, and they focus too much on macro and microeconomic data, when generally they have less of a bearing effect than technical analysis does. Because when someone is investing, they're looking at the charts. They're not primarily looking at macroeconomic data, because they want to understand the price that they're buying at, and they want to understand the price that they want to take profit at. So it's still all technical from a technical basis. So putting all of that into perspective, guys, we're ready, and we just need to be patient. That's all for now, guys. Hope this video was beneficial. Please keep up to date with what we got to offer. Please share this video. And that's all, guys. Take care, and I will see you maybe even at the end of the week for another bonus video. Take care.